What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the technicals on the longer time frames for AMC to give us an indication of what we are basically expecting going into the end of this week. Now, in addition, we are going to briefly talk about the options chain for AMC, what it is looking like in terms of where some of these contracts are and what the open interest is looking like in terms of the calls and puts. The Max Pain, again, we do have to take a look at. A lot of people have been asking me about this in the live streams, and it is an important concept to bring up, but the most important thing that we are going to be talking about in this video is that it is very, very, very likely that a massive wave of forced share recalls just went out over last night, maybe towards the end of the day yesterday, and we just saw that data populate throughout Ortex and some of these other sources today. Now, there are some very key things about this here and some questions that we're going to aim to answer. The first, well, if there were 30 million shares that were recalled, typically when you see a forced share recall, you would assume that those shares had already been shorted and you would expect to see that buying pressure come back into the stock. So why didn't we see that today? We're going to talk about that and what I see as kind of the plan going forward for exactly why this recall has happened and why this is actually potentially very good news for anybody that is really on the AMC train right now, and pretty bad news for anybody that is looking into getting into a new short position against AMC. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, you guys have seen it in the live chats, the amount of success that people have been having with the 1348 trading strategy. If you want access to everything new that we are rolling out, the real-time options data, all of the new algorithms that we have, over 40 private live streams every single month, and the alerts, make sure you check out that link down below before prices go up next month so you can get grandfathered in. But guys, remember, engage with this video. This is going to be a very, very key breakdown. So if you wouldn't mind hitting that like button down below. So AMC closed the day today at $11.88. It was up 3.48%, very solid day today, but looking at this on the 4-hour time frame, we do still have a ways to go. We do need to see this 1348 cross back to the upside here. We are starting to see the MACD cross to the upside as well on the 4-hour time frame, which is a good sign, but we do need to see momentum above this 200 EMA. Again, tomorrow is going to be an absolutely wild day. We are looking at a 75 basis point rate hike, which, depending on how well the market priced it in over the last 2 days, we could be in for a lot more volatility. So make sure you guys are prepared for that tomorrow. We are going to get the report at 2 and Powell's going to be coming on at 2:30. Now, when we come over to Stonko Tracker here and take a quick look, there's 1 million shares to borrow right now on AMC at about 16.4%. Now, how did they get these 1 million shares? We're going to talk about this a little bit later. But again, remember, Stonko Tracker is only reporting from one broker. So you can't really take this data with too much certainty. Now, when we look at the calls for this week, again, this is a monthly options expiration period for AMC. About 8,100 calls in the money right now with 129,000 puts. Now, when we come over here and look at Max Pain for AMC, $16, since we are so far down below Max Pain, they are going to be hedging a lot of those puts by going out into the open market to short. Now, this situation that we've seen today with AMC is very, very important and a very interesting thing that needs to be explained to everybody because there is a lot of confusion on the things that are going on. So again, guys, if you have not already, make sure you guys engage with this video. I want everybody to fully understand these concepts. The first thing is why we would potentially see a forced share recall. We've brought up this research paper a couple of times in the past, but it's very, very helpful to bring it back up. To proxy for the risk that a loan recall may force a short seller to close a position, I use an equal reduction in shares available, yada, yada, yada. For easily borrowed stocks, I estimate that a forced recall occurs about once in every 8 years. For stocks with utilization above 75%, which AMC and GME definitely have, forced recalls occur about once in every 26 days. But again, the size of the recall is going to vary. So this is a key statistic that I want you guys to keep in mind going a little bit later in this video. Now, when we take a look at the actual Ortex data here, remember, the shares on loan for AMC yesterday was over 190 million, and that has come back down all the way to 159 million shares. So did shorts cover 30 million shares? We're going to talk about that in a second, but this happened with GameStop as well. We did see a pretty significant decrease on GameStop shares on loan 7 days ago, 23.39 million. We see the current at 17.32 million. MetaMaterials also saw a pretty significant decrease of about 10 million shares as well. So here's kind of what we see going on here. Remember, there were a boatload of shares on loan for AMC that were not shorted. We saw the estimated short interest right around here in terms of shares sold short when we were at about 190 million shares on loan at about 115, 120 million. Now, when the amount of shares on loan, that difference right there was about 60 to 70 million shares, meaning that there were that many shares that were loaned out but have not been sold short. So when we're thinking about what's going on here, one of the very, very likely outcomes has to do with cost to borrow. So we've seen these giant differences in cost to borrows over the last couple of months. We see the minimum cost to borrow right here at 10.49%, the average cost to borrow 20.8%, and the maximum cost to borrow at about 33%. But when we come back a couple of months ago and take a look at the actual cost of borrows at what they were, well, they were about 1.77%. We saw them fluctuate around a little bit, but then we saw that significant decrease. So here is a very likely explanation as to what has happened. Remember, institutions own a lot of shares of AMC and they are loaning out these shares. So are these prime brokers, these Goldman Sachs and Morgan Stanleys of the world. But what we have to think about here is that these large institutions who are trying to short AMC have very long and in-depth relationships with these lending institutions, these banks. So it's very, very possible that these large institutions were able to lock in their cost to borrow. We went over this on the stream today that let's say the cost to borrow was at that 1.77% that we were seeing right here. But in order for the banking institution to essentially get around the fact that most of the time these cost to borrow rates are variable. So if the cost to borrow rates skyrocket like we recently have seen them do, well, they're able to charge more on those shares. But if institutions are locking in their cost to borrow at, let's say, 3% back here at one point when the actual average cost to borrow rate was about 1.76 or 1.77, well, that's a problem for these lending institutions because they are missing out on a lot of extra revenue on these shares that they are loaning out. And then the other question that we have to answer is, well, if these shares were going out on loan at maybe these higher but fixed cost to borrow rates, it does also make sense as to why we were seeing that giant difference in shares on loan and the amount of shares that were estimated to be sold short. Because if you lock in your cost to borrow rate, well, there's really no rush in entering your short position. You can take your time, you can find your entry and get in when it makes sense. So here's what the banking institutions most likely have just done. They've said, hey, the cost to borrow average right now is 20.8%. And remember, if shares go out on loan, the lending institutions can recall those shares at any given time and they don't have to give a reason. So what they've most likely done here is recalled a lot of the shares that were out on loan but have not actually been shorted. And here's where the kicker comes. Now, these institutions that wanted to have these shares out on loan at those 3% maybe, for example, cost of borrow rates, if they want to take these shares out on loan again, well, they're going to have to paying that 20.8%, that 33% max that we are seeing over here, which is going to be a lot different than that 3%, which could further deter them from entering into more short positions. And then the last question that I really want to answer for everybody is, were 30 million shares covered, closed out on AMC today? No, absolutely not. We did not see really enough volume today on AMC for that to happen. When we come back over here to the chart, the volume today on AMC was 25.47 million. So not even 30 million shares had changed hands today. So no, there was not a wide, massive scale covering event going on today. And if there was, we would have seen a much more significant increase in the price action versus the 3.83% increase than we saw today. So that is going to wrap up this update on AMC and explaining this whole forced share recall situation that we have just seen. So again, guys, if you wouldn't mind hitting that like button down below, subscribing if you guys do want to see more videos like this, and I will see you guys in the next video.